The only way that you can be a successful and a profitable trader is to stay in the game. You have to make sure that you're able to stay in the game for the long term. That means you can't ever take really big drawdowns, and you certainly can't ever blow up your account. If you get put out of the game, obviously you can't win the game. So today I wanted to cover some of the signs that you're trading too big. So these are some of the warning signs that you're trading too big. Please don't blow up your account. So the very first sign that you're trading too big is when you have to close short options positions because they're in the money. You often see this with traders. They sell a put, or they sell a call, or they sell a strangle, and then one of their options becomes at the money or just in the money, and then they immediately have to close that position because that position has become so dangerous to them. They have to close it now and take whatever the loss is. It's probably already a big loss, but they can't possibly let that loss get any bigger because they're already too big essentially at that point. The truth is, if you sell an option and it becomes in the money, and as soon as it's in the money, it's already too big a loss for you to stomach, that's a sign you're trading too big. That's a sign you should have never been in that particular trade to begin with. This often happens because people, they sell really trashy options like extremely low deltas. So I'm talking about 5 deltas, 4 deltas, 3 delta options, especially in things like the ES futures or in SPY, you know, especially in like the index products, right? They go sell those 5 delta puts, and sometimes, you know, the market does crash, and a 5 delta put is going to be hurt by a crash just like a 50 delta put. But actually the 5 delta put is going to be much worse than the 50 delta put, the one you sold at the money. It's because the 50 delta put, you received a very handsome credit for selling that put. It was worth it for you to take the risk of that occasional market crash that's going to hurt. That 5 delta put, you got paid pennies for selling that thing, right? The buying power drastically changes on those very low delta options, especially on futures options. So, you know, just be careful with that. Also, don't sell too many naked option contracts. So if it's a situation where you know you can only comfortably sell 1 contract, don't sell 5 contracts. This is where people really get hurt. And a similar warning sign that you're trading too big is when you hold losing positions too long because you fear taking what is now a big loss. So you were in a trade, let's say you sold a strangle. It went against you. One of your options is at the money or maybe in the money, and now that potential loss is already too big for you to close the trade and accept that loss. You can't accept that loss. It's too much of a percentage of your account to take that loss. So what do? Well, you just sit on it, right? You just decide, hey, taking that loss, that's too devastating to my account, so I'm just going to sit and I'm going to hold and hope. Well, guess what? That strategy, the hold and hope strategy, sometimes that works out, but much of the time it doesn't work out. So you don't put yourself in a situation where you ever need to be desperately holding and hoping, right? If you size your trades appropriately, then when, you know, a trade goes against you, it's a normal kind of loss. Don't be in a situation where what is essentially a standard kind of loss, like an option going in the money, is going to happen. It's going to happen a lot, right? If an option barely gets in the money and that's devastating to your account, that trade was way too big for you to take in the first place. Another sign that you're trading too big is if you're constantly monitoring your positions, that's often a sign that you're overtrading. Overtrading is trading too big. So if you take too many trades, then typically what that means is you're probably using way too much of your buying power, which of course is very dangerous, right? And don't overtrade, because the more you stare at your trading platform, right? If you're one of these people that sit there and stare at the markets all day, guess what? If you sit there and stare at the markets all day, you're going to find trades to take, because you're going to eventually talk yourself into some trades that you really didn't need to take. And what ends up happening is you end up forcing trades. You take these trades you really didn't need, and these trades that you really didn't need aren't good trades. If they were good trades, you would have found them before, now, right? The good trades are the ones you find as soon as you open your trading platform and start looking for things. But, if you stare at a screen for an hour, 2 hours, 3 hours, eventually you find the mediocre trades, or in some cases, really questionable trades, right? And when I talk about questionable trades, I'm talking about trades that normally wouldn't fit your criteria for entry. So maybe the return on investment really sucks as far as the max risk versus the max reward, right? A lot of times that's bad. The buying power maybe isn't great as far as buying power efficiency. So you end up taking these very mediocre at best trades that you would have never taken had you just stuck to trading 15 minutes a day, 30 minutes a day, but you wanted to be one of the cool kids that wants to watch the market for 6.5 hours a day. That's usually not a recipe for successful trading. Also, if you can't step away from trading at all, and you see people like this, they have to monitor every single second that the market opens. So in the stock market, that 6.5 hours that the stock market is open, they have to be there for every single second of it. They can't step away for it at all. That's a sign that they're way too invested in the outcome of their trades. And the reason they're too invested in the outcome of their trades is because they fear some of the possible outcomes of their trades because they're trading too big, right? If they were trading normal kinds of sizes, they could go grab lunch, or they could take the day off. They could take a week off. They could go on a week-long cruise because they know the positions they're in, they're okay positions, right? They've defined their risk in some way. They've properly hedged some things. But the people that are really risk takers, right? Those are the ones, they can't step away from that monitor at all. One of the clear warning signs that you're trading way too big is if your losses seriously impact your mood or your spending habits. And you see this a lot with people that get very depressed because they lost a significant chunk of money, right? And sometimes those losses also affect their spending habits. Now, they were living one kind of lifestyle. Now they have to live a totally different lifestyle because they can't afford that lifestyle anymore, right? So here's some things. Here's a warning sign, right? If you're depressed when you have a bad week or a bad month, you're trading too big. If you can't sleep at night, you're trading too big. If you've ever sat there and watched the market and started yelling at your monitor, you're trading too big. And the final warning sign I want to talk about is maybe the most important one, because this one is what really gets people into very deep trouble. I'm talking about people that end up going in debt, owing tens of thousands, hundreds of thousands of dollars, millions of dollars in some cases. It's these people that win a lot of money very quickly at trading and think they're good at trading, and they keep doing the thing, and it ends up costing them. Some cases it costs them everything, including their life, right? So if your account value increases very fast, especially if you are greatly outpacing the market, you're almost certainly trading too big. The only way that you can just greatly outpace the broader stock market is basically through sheer luck and taking a lot of risk. You are betting way too big, right? You're taking some extremely risky trades, and through luck, you got lucky. When you take crazy bets, some people will win, right? It's going to happen. You have to recognize that's what's happening, though. So if your account value is increasing very fast, incredibly fast, that's not because you're a good trader. It's because you're taking way too much risk. And if you keep trading the way you've been trading, I promise you, you're going to lose everything. So there you have it, some of the signs of trading too big. It's something you got to be careful of. Again, you can't win the game if you can't stay in the game. Now, if you want to help support this channel, and if you haven't already checked out my book, please check out my book, The Super Wheel Option Strategy. This book is available on Amazon. You'll find a link in the description below. Peace, guys.